There is one document you can open in about 5 minutes that for a large number of people over age 65 can lead directly to a higher Social Security payment. Not a one-time bonus, not a refund. We are talking about years of getting a bigger deposit every single month for the rest of your life. And the reason most people never collect that money is not that they fail to qualify. It is that no one ever told them this document existed or showed them the one specific thing they need to find inside it. Because here is the part that matters most, and it is also the part almost nobody takes the time to explain. Simply opening the document is not what increases your payment. It is knowing exactly which line to examine once you have it in front of you. Miss that line, and you walk right past money that belonged to you the whole time. So throughout this video, I am going to tell you exactly what this document is, where you can find it, and the precise thing to look for inside it that can add more money to your monthly payment. I am also going to walk you through the mistakes that are quietly cutting millions of checks short. Who is most at risk of having one of those mistakes sitting on their record right now, and the straightforward form that can fix it. Stay with me until the end, because near the conclusion, I'm going to share several more ways to increase your payment beyond simply correcting an error. And at least one of them applies to almost everyone watching right now. This is real money. It is your money. And by the time this video ends, you will know exactly how to go after it. I have spent more than 15 years sitting face-to-face with retirees, reviewing their finances line by line. And I can tell you, the most common pattern I see is honest, hard-working people who are receiving less than they earned each month because of a number sitting on a government record that no one ever bothered to verify. These people worked their entire careers for that benefit, and a quiet mistake, sometimes one that is decades old, is trimming money from their payment without them ever realizing it. I'm going to make sure that does not happen to you. Let me begin with what this document actually is, because once that becomes clear, everything else falls into place. The document is your Social Security statement. It costs nothing. It lives inside an online account called My Social Security on the official government website ssa.gov. If you have never created one, the process takes roughly 5 minutes, and once you are logged in, your statement is right there waiting for you. Inside that statement is something most people have truly never looked at in their entire lives: your complete earnings history. Every single year you ever worked and contributed to Social Security is listed there, going all the way back to your first job, maybe even as a teenager, with a dollar figure beside each year. Now here is why that history is the foundation of your payment amount, and I want you to really absorb this because it is the core of everything that follows. Most people assume Social Security looks at their most recent years of work or just averages what they made over time. That is not how the system works. Social Security takes your 35 highest earning years. It adjusts each of those years for inflation. It averages all of them together and then applies a specific formula to produce your monthly payment. So that 35-year average is everything. It is the single most important number in your entire Social Security calculation. Your whole check is built from it. Let me make that concrete for a second. Picture one of those 35 years, a year when you worked full-time and earned solid wages, showing up on the record as zero or as half of what you actually brought home. That deflated number gets blended in with all the others and pulls the entire average down. And since your payment is calculated directly from that average, one bad year quietly reduces every check you will ever receive. It is like one failing grade dragging down a lifetime grade point average. Except this average determines how much money you have to live on. That is why people who correct even a single year often see a meaningful jump. They are not getting a bonus. They are finally getting the payment they should have received all along. And the only place anywhere where you can actually see the raw year-by-year numbers behind that figure, the real data going back decades, is that statement. Your payment is calculated from those numbers. But you never get to see those numbers unless you open this document. And look, it contains the most important financial figure in your retirement, built from information you have never been shown and that no one has ever asked you to verify. So why does simply reviewing it lead to a larger check for so many people? Here is the reason. Every one of those numbers came from payroll reports your employer submitted across your entire working life. Decades of reports from every job you ever held, and sometimes those reports contained mistakes. A year where your employer entered the wrong figure. A year where the recorded amount is far lower than what you actually earned. A year that shows 0 when you know for a fact you were working the entire time. And each one of those errors pulls your 35-year average down, which means your monthly payment, the one you are living on right now, is smaller than it should be. Not by a tiny amount either. According to the Social Security Administration's own data, a single year of missing or inaccurate earnings can reduce your monthly benefit by about $100. Let that sink in. One incorrect year, $100 a month. That is $1,200 a year. Gone. And over a 20-year retirement, that one wrong year quietly cost you about $24,000. $24,000 from a single mistake on a single line you never knew existed. And if 2 or 3 years on your record are wrong, you multiply that number right away. And here is the part that should make you both annoyed and motivated to act. The Social Security Administration does not correct these errors for you automatically. There is no built-in review process. There is no alert system. There is no letter arriving in your mailbox saying, "We think your record may have a mistake. Please take a look." The data goes in, your payment gets calculated from it, and unless you personally open that statement and compare it against your own memory and your own records, that error simply sits there quietly for years, reducing your check the whole time. The money does not come looking for you. You have to go find it. Now, you may be wondering whether you are actually someone who could have one of these errors on your record. Let me tell you exactly who is most likely to have money sitting there unclaimed right now. Because if you recognize yourself in this list, you need to go check this week without delay. First, anyone who worked for a small business, especially during the 1980s and 1990s. During that period, a lot of payroll was handled by hand, sometimes by an owner working from a paper ledger, and honest mistakes were much more common than they are today. If you spent years working for a small shop, a neighborhood company, or a family-run business, your record is exactly the kind that often contains errors. Second, anyone who has ever been self-employed, freelancers, independent contractors, anyone who ran their own business and paid self-employment tax. The way those earnings are reported leaves plenty of room for a year to be listed at the wrong amount or to not show up at all. If you worked for yourself at any point, even for just a few years, look at those years very closely. Third, anyone who changed employers frequently. Every time you started with a new company, that was another chance for someone in payroll to mistype your information or your Social Security number and send your earnings somewhere they did not belong. The more jobs you held over your career, the more opportunities there were for something to go wrong. And fourth, and this is a big one that gets overlooked all the time, women who changed their last name after marriage or divorce when that name was never properly updated with Social Security. Here is what happens in that situation. If the name your employer submitted does not match the name on file with Social Security, those earnings can fail to attach to your record entirely. They sit somewhere in the system, credited to nobody. Years of real work, actual money you earned through your own effort, simply not counted toward your payment. If you have changed your name at any point in your life, this is one of the most important things you will ever check. Now, there is one more thing inside that statement that tends to surprise people, and it can carry major value. If you have fewer than 35 years of earnings recorded, and many people do because they took time off to raise children, go back to school, care for an aging parent, or worked in a job that was not covered by Social Security, then the system does something you really need to understand. To reach 35 years, it fills every empty year with a 0, and those zeros go straight into your average and pull your payment down sharply. But here is where the opportunity lies. Sometimes those years are not actually empty. Sometimes you truly were working during that time, and the earnings were just never recorded correctly. Finding one real year of work sitting on your record as a zero and getting it corrected can add anywhere from $50 to $150 per month to your payment. Find 2 or 3 such years, and now you are looking at a substantial raise that follows you for the rest of your life. Let me give you a real picture of what this looks like, because raw numbers alone do not always connect. Let me describe a man I will call Raymond. Raymond spent 3 years in the late 1990s working for a small construction company. Good years, physically demanding work, decent pay. Decades later, just before retirement, someone finally suggested he pull up his Social Security statement and actually read it. When he did, he noticed something that stopped him cold. Those 3 years in construction were recorded at about 60% of what he had actually been paid. The owner had done payroll by hand and sent in the wrong figures year after year, and Raymond had never had any reason to suspect a thing. So he collected the old paperwork he still had, filed a correction request, and his monthly payment went up by more than $300 for the rest of his life. That money had been sitting there unclaimed for almost 30 years, and the only thing that unlocked it was Raymond finally opening the document and reading one specific section. Same Raymond, same work history. The only difference was that one afternoon he decided to look. Let me tell you about one more person, because her situation is the one that worries me most and may also be the most common of all. I will call her Margaret. Margaret married young, took her husband's last name, and worked for nearly 15 years under that name. Later in life, she divorced, changed her name again, and kept working. She never thought much about it. Decades later, when she finally pulled her statement, there was a stretch of years in the middle of her career where the earnings numbers were far lower than she remembered, and a few years were almost blank altogether. What happened was simple and deeply unfortunate. During those name changes, some of her earnings had been reported under a name that no longer matched her Social Security record, and that money never attached to her file. It had been floating inside the system, assigned to no one for more than 20 years. Real work, real paychecks, simply floating uncounted and pulling her payment down the whole time. When she brought in her old tax returns and got the record corrected, her benefit increased meaningfully for the rest of her life. If you are a woman who has changed your name even once, I am speaking directly to you right now. Check this. You may be owed more than almost anyone else watching. Now, correcting an error on your record is the biggest opportunity for many of you, but I promised you more than that, because not everyone has an error to fix. So let me give you several additional ways that this document and the steps around it can raise your payment, because the goal here is simple. Every dollar you earned should be coming to you. The first method applies to nearly everyone and goes right back to those zeros I mentioned earlier. If your record still has 0 years among your top 35, you can replace them. Every additional year you work, even part-time, even later in life, can knock one of those zeros out and put a real number in its place. And because the formula uses your highest 35 years, one more productive year can push a 0 or a low early career amount out of the calculation and lift your average. For some people, one more year of work is worth much more to their monthly payment than they ever expected. Second, the timing of when you claim matters a great deal, and your statement shows the estimates you need to understand it. If you have not started collecting yet, every year you wait past full retirement age increases your payment by about 8% per year up to age 70. That is a guaranteed growth rate you simply will not find anywhere else. Your statement lays out those projections, so you can see exactly what waiting is worth in your case. And third, if you are married, divorced after a long marriage, or widowed, there may be a larger benefit available to you than the one you are currently collecting based on your own record alone. A spouse may be able to claim up to half of the higher earner's benefit amount. A widow or widower keeps whichever check is larger. People leave enormous sums of money behind here simply because they assume the payment they already receive is the only one available. it is absolutely worth checking. Each one of those strategies is a legitimate way to increase your monthly payment. And each one starts the same way, by opening that document and understanding what it is telling you. So here is exactly what to do step by step. Write this down or simply re-watch this section later. But before the steps themselves, gather anything that reflects what you actually earned during your working years. Old W-2 forms, old tax returns, old pay stubs, even a solid memory of which years you held which jobs. Put everything in one folder before you begin. The more documentation you have ready, the stronger your case will be. And if there is a box of old financial papers in a closet that you have been meaning to throw out, do not get rid of it until after you finish this process. That box could be worth thousands of dollars to you. Step 1. Go to ssa.gov and create your My Social Security account if you do not already have one. It is completely free. It is the official government site and takes about 5 minutes to set up. One important note: use only the real ssa.gov address. Do not click an ad or a link that promises to handle this for you. Step 2. Open your statement and go to the Earnings History section. You will see a list of every year going back to your first job with a dollar figure next to each one. Step 3. And this is the part that actually creates results. Compare those numbers year by year against your own records. Your old W-2s, old tax returns, old pay stubs, whatever you have kept. You are looking for 3 things. Years where the figure is clearly lower than what you actually earned. Years that show 0 when you know you were working, and years that are missing from the list altogether. Go slowly and pay extra attention to your highest earning years, because those feed into your 35-year average. A mistake in a high-earning year hurts your check much more than a mistake in a lower one. Step 4. If you find something that does not match, the form you need is called a Request for Correction of Earnings Record, and it comes directly from Social Security. You submit it along with documentation proving what you actually earned. The strongest support is your original W-2s, and here is something most people have no idea about. Even if you threw away your old paperwork years ago, Social Security can retrieve copies of your W-2s going all the way back to 1978 at no charge when the purpose is correcting your earnings record. So, a missing shoebox of old tax papers is not a valid reason to leave this money unclaimed. Step 5. Be patient, but stay persistent. Social Security usually handles these corrections within about 10 to 90 days. Once the process is done, your benefit is recalculated and the higher amount starts showing up in your payments going forward. There is a 3-year window for correcting recent errors more easily, but do not let that discourage you from pursuing older ones. Mistakes from 10, 20, even 30 years ago can still be corrected when you have the right documents to support your claim. Never assume that because something happened a long time ago, it is too late to fix. If you have proof, the correction is worth pursuing. Now, I know some of you are listening to all of this and thinking, I am not comfortable with computers. I would not know the first thing about setting up an account on a website. I understand that completely, and I do not want that hesitation to be the thing that costs you thousands of dollars over your retirement. So here is what you can do instead. You do not have to handle any of this alone, and you do not need to do it online at all. You can call Social Security directly at 1-800-772-1213 and ask them to mail you a copy of your earnings statement and help you review your record. You can also go to your nearest Social Security office in person, sit across from a real staff member, and have them pull everything up with you there. And if you have a son, daughter, grandchild, or trusted friend who is comfortable with websites, this is exactly the kind of thing you can ask them to help you with over one afternoon. There is no shame in getting help. The only real mistake is letting the money stay uncollected because the website felt overwhelming. The benefit belongs to you no matter how you access it. There is always a path. And let me give you one serious warning, because whenever there is money owed to older adults, someone usually shows up trying to take a cut. You should never have to pay anyone to do any of this. Not a flat fee, not a percentage of your recovery, nothing at all. Checking your statement and filing a correction is free, and you do it directly with Social Security. If you ever see an ad or get a phone call from a company promising to recover your Social Security money in exchange for part of it, hang up immediately. All they plan to do is follow the same free steps I just explained and then keep some of what belongs to you. The only site you need is the real ssa.gov. And for extra help, turn to a trusted family member or a legitimate advisor who does not work on commission. I know this is a lot to hold in your mind at once. The statement, the earnings record, the 35-year average, the correction form, the extra moves that can raise your payment. And I have had so many of you ask me to bring all of it together in one place, written in plain language, with the exact steps and the exact forms laid out clearly so you can move through it at your own pace and actually get it done. So I did exactly that. It is called the Senior Money Playbook. It is a plain language guide written specifically for people over 65 that you can read on any phone, tablet, or computer, or print out if you prefer paper. It walks through this whole process, including checking and correcting your earnings record, plus guidance on timing your claim, spousal and survivor strategies, Medicare programs, property tax relief options, and the tax advantages I cover regularly on this channel. All of it is paired with the practical steps needed to actually claim what is yours. The link is in the description below this video. If this channel has ever helped you put even $1 back in your pocket, that guide can help you find many more. Now let me bring everything back to the main point, because I want you to actually act on this instead of just nodding along and moving on. Your Social Security payment is built from decades of earnings data. If even one line is wrong, your check is smaller than it should be, and it stays that way every month until you find the mistake and fix it. Nobody is coming to hunt down that error for you, but the document that lets you check it yourself is free, sitting inside your account right now, about 5 minutes away. Most people spend more time studying a grocery receipt than the one record that determines their income for the rest of their lives. Do not be one of them. This is absolutely worth one afternoon of your time. So today, take this one action. Go to ssa.gov, open your statement, read your earnings history line by line, and if anything does not match what you know you earned, submit the correction request. That is the whole process. That is how a free document becomes a higher monthly check. And if this video helped you, do one thing for me in return. Share it with someone you care about who is currently receiving Social Security or nearing the age when they will. Especially anyone who was self-employed, worked for a small business, or has ever changed their name. Those are the people most likely to be owed extra money and least likely to know it exists. The government is not going to make that call for them, but you can.